Hey there, welcome back to our channel where we discuss everything related to personal finance. Today, we're going to talk about a situation that can happen to anyone who has a 401k retirement plan: overcontributions. If you're not familiar with the term, overcontributions occur when you put more money into your 401k account than the IRS allows for a given year. While it may seem like a small mistake, it can have significant consequences that can impact your retirement savings. So, in today's video, we're going to discuss what overcontributions are, how to avoid them, and most importantly, what to do if you find yourself in this situation. We'll also talk about the steps you can take to correct the mistake and minimize the potential penalties and taxes. So, whether you're just starting out with your retirement savings plan or have been contributing to your 401k for a while, this video is for you. Stick around until the end, and make sure to take notes because the information we're going to share can help you make smarter decisions with your money. Have you recently discovered that you have made excessive contributions to your 401k plan? Acting promptly can help reduce the negative impact, but delaying the process will result in increased tax bills and hassles. The excess funds must be returned by the plan administrator if you have contributed more than allowed. Here are the steps you need to take to rectify the situation. To enhance your retirement plan, you may work with a financial advisor if you have additional queries. What is the maximum contribution? What is the maximum amount you can contribute to a 401k plan? According to the IRS, the limit for employees participating in a 401k plan in 2023 is $22,500. However, if you are 50 years or older, you may contribute additional funds as a catch-up contribution. The catch-up contribution amount in 2023 is $7,500, which means if you are 50 or above, you can contribute up to $30,000 to your 401k plan. These limits are subject to annual updates. In 2022, the maximum contribution was $20,500, and the catch-up contribution was $6,500. It is essential to ensure you are using the correct figures when making your calculations. It is important to note that these limits only apply to individual contributions and do not include employer contributions. Employers have different contribution limits. The total amount you can contribute, including any employer contributions, is $66,000 or 100% of your salary in 2023. If you realize that you have made an overcontribution, there's no need to panic as it can usually be resolved easily if you act quickly. Below are some steps you can take to rectify the situation. Immediately inform your employer or plan administrator. Inform your employer about the overcontribution as soon as possible. It's essential to catch the mistake before tax day, which is usually on April 15th, but in 2023 it falls on April 18th. Rectify your tax forms. If you discover the error before tax day and before filing your taxes, you can get a corrected W-2 to rectify the mistake. However, if you discover the mistake after tax day, you'll need to file an amended tax return. Pay taxes on the excess contribution. Your employer will refund the excess amount contributed, along with any earnings it generated. You will be liable to pay taxes on the amount refunded, as well as any early withdrawal penalties that may apply. Notify your employer or plan administrator of the error, and they will rectify the situation by refunding the excess amount contributed and fixing your tax forms. You will need to rectify your tax paperwork and make necessary payments to ensure the situation is resolved. What are the penalties? Overcontributing can result in penalties, including problems with tax returns, additional taxes, and penalties. If you rectify the error before the tax day deadline, the consequences are relatively minor. You'll need to file your taxes with the updated W-2, and you'll have to pay taxes on the overcontribution as though it were wages. Consider this: if you hadn't overcontributed, the money would have been included in your regular paycheck, and it would have been taxed accordingly. Therefore, even though the money is arriving late, it is taxed as if it were earned in the usual manner. However, if you miss the deadline, you'll owe additional taxes, and you may be subject to a 10% early withdrawal penalty on the excess amount. Additionally, you'll owe additional taxes again, once for the tax year in which you made the error and once more in the year in which you rectify it. Why do overcontributions happen? Overcontributions frequently happen when individuals have multiple sources of retirement savings and aren't keeping track. If you have the same employer and retirement account for an entire tax year, it's more probable that your employer or plan administrator may detect the error. However, issues may arise if you change jobs, even briefly, and have two 401k accounts. This can also happen if you work multiple jobs and have 401k plans associated with each, so it's crucial to keep track of all your 401k plans. Another common stumbling block occurs when you receive a significant increase or bonus and forget that your 401k is set to deduct a fixed percentage of your paycheck. If you're calculating based on your previous normal salary, you may remain within your limits. However, a bigger paycheck results in a higher 401k deferral, which may result in overcontributions. Bottom line: managing retirement savings can be complicated, especially when taxes come into play. If you suspect that you have overcontributed to your 401k plan, don't hesitate to contact your employer or how to save for retirement. To effectively manage your retirement savings, seek guidance from a financial advisor. SmartAssets' free tool matches you with up to 3 reputable financial advisors in your area, and you can interview them at no cost to determine the best fit for you. Start using this tool today to find an advisor who can help you achieve your financial goals. Remember that a 401k is not the only option for retirement savings. You may also consider an individual retirement account, IRA, with a contribution limit of $6,500 for 2023, which offers the same tax benefits as a 401k. Alternatively, a Roth IRA does not provide an upfront tax deduction, but you won't have to pay taxes on your retirement income. If you're taking advantage of employer 401k matching, SmartAssets' 401k calculator can help you determine your savings based on your annual contribution and your employer's matches.